I've watched thousands of traders chase the same pumps, enter the same tops, and wonder why they're always late. The difference between consistent winners and everyone else isn't luck or insider access. It's a system. A radar that spots opportunities before they trend, a daily routine that removes emotion, and an income structure that compounds with the ecosystem itself. What I'm about to show you is the complete operating framework professionals actually run. No theory, just the exact workflow. Most people treat crypto like a casino. Professionals treat it like an early warning system. I built a 5-layer radar framework where every opportunity must clear at least 3 layers before it deserves a single dollar of capital. Layer 1 is narrative alignment. You need to know what cycle we're in, risk on or risk off, and which narratives are gaining actual mindshare. For 2025 and beyond, the high probability plays are AI cross crypto, tokenized real-world assets, on-chain finance version 2, decentralized physical, infrastructure, and identity plus data ownership. Layer 2 is infrastructure positioning. The best risk-reward sits below the application layer. I rank it this way: base layers and scaling first, middleware like oracles and indexing second, applications third, and memes dead last as pure speculation. Layer 3 is the on-chain reality check. Before you even look at a chart, you verify 4 things. Are active wallets increasing? Are transactions growing? Is there actual revenue or fees? And what's the token supply inflation doing? Layer 4 is the tokenomics filter. Instant red flags include huge unlocks coming, unlimited emissions, VC dominance with weak vesting, or no real sync for tokens. Green flags are burn mechanisms, usage-driven demand, fixed or declining supply, and clear utility beyond governance. Layer 5 is market structure timing. You only deploy capital when the accumulation range is clear, liquidity is building, the downtrend is broken, and volume confirms the move. You don't need bottoms, you need confirmation. This radar isn't something you stare at all day. I run a 1 to 2 hour weekly workflow split across 3 days. Monday is for scanning narratives and reviewing macro, interest rates, liquidity conditions, Bitcoin dominance. You're not forming opinions, you're reading the battlefield. Wednesday is deep dive day. Pick 1 or 2 projects, read the actual documentation, dissect the tokenomics, and check the on-chain data. Most people skip this step and wonder why they get rugged. Sunday is portfolio rebalancing day. You cut the losers, no matter how much you liked the story last week. You add to your conviction winners. This isn't emotional, it's mechanical. The goal is to position before consensus forms, not after everyone's already talking about it. That's the edge. You're building a system that filters noise and amplifies signal, week after week, until it becomes automatic. Daily execution is where discipline beats intelligence. The morning routine takes 60 to 90 minutes. First is a 15-minute market scan. Bitcoin, Ethereum, S&P 500 dollar index. Next is a 20-minute game plan creation. You write down bullish scenarios, bearish scenarios, key support and resistance levels, and most importantly, what invalidates each idea. If price does X, I do Y. If price does Z, I stand down. Then 10 minutes of mental conditioning, box breathing, visualization of perfect execution, detachment from outcome. Professionals train their state, not their emotions. The trading window is 1 to 3 hours maximum. You trade only your setup, no revenge trades. A hard cap on trades per day, and you stop trading immediately after any rule violation. Most professionals trade less, not more. The end-of-day review takes 15 minutes. You journal 3 things: what worked, what didn't, and did I follow my rules? You track behavior, not just profit and loss. This is how you compound skill instead of just hoping for lucky trades. Income in Web3 isn't a salary. It's ownership plus leverage plus scalability. There are 4 archetypes: knowledge leverage, research threads, alpha communities, paid dashboards, education content. Low capital, high leverage. Capital deployment, staking, liquidity provision, structured DeFi strategies, tokenized yield. Passive but requires serious risk control. Builder or operator. DO contributor. Tokenized startups, on-chain services, AI agents transacting on-chain. Highest upside, slower start. Platform ownership, token-gated communities, NFT memberships. Web3 SaaS, creator economies. This is where real generational wealth forms. I recommend a hybrid model. 50% in long-term crypto holdings, 20% trading capital, 20% yield in DeFi strategies, 10% experimental Web3 income. Your income flows from 4 streams: yield, trading skill, content, or community, and equity-like token exposure. The golden rule: never depend on one protocol, one chain, or one narrative. Diversify by mechanism, not just by token. That's how you survive when individual projects implode. Let's integrate everything into one view. Daily, market scan, trade execution if your setup appears, journal. Weekly, narrative radar, portfolio review, skill improvement. Monthly, capital reallocation, cut dead weight, double down on what's working. This system does 3 things most traders never achieve. You're not chasing pumps, you're not reacting emotionally, and you're positioning before consensus. That's the real edge you're building. Not prediction, not luck, just a repeatable process that gets sharper every cycle. Most people in crypto are flying blind, reacting to every headline, every pump, every dump. You now have the exact framework professionals use to filter noise, spot opportunities early, execute with discipline, and build income that compounds. With the ecosystem, the market will test you. Your emotions will test you. But the system doesn't care about feelings. It just runs. And when you run it consistently, you stop being late. You stop being emotional. You start being early.